All right, everybody. Stocks by the numbers, welcome back. Wanted to do a quick update here looking at three stocks that we looked at recently. I spoke about, in my opinion, saying that overall the value of the business seemed to be undervalued in, relation to the current stock price. When we were looking at it, all three of these stocks had pretty decent days. We got news coming out on a name like SoFi right here today. But overall, in my opinion, I actually think we might still have more room to go. And I just wanted to do a quick update on these three names that we looked at over the last couple of months. So the first one here is SoFi. I mentioned this a couple of times in the last recent videos as well. We mentioned that the stock ran up here and was just kind of consolidating into this like 6-7 month descending wedge right after the ball dropped, and we were watching the numbers come out. They were beating top and bottom lines consistently, as they've been doing, and a lot of people were wondering what's going on, what's not happening, how come the stock is just kind of fizzling downward. The company hit lows here of 615, yep, 615 here, and you can see that we popped out of the wedge. We came right back down basically to new 52-week lows of 601, and then we began just stepping upward, and you can see the last couple of days have been very green, and today the company closes here above $10 a share at 10.04, up a little over a point, 11.4% move on the day, on the news of a $2 billion partnership with Fortress Investment Group. So people were originally keeping this stock down here, and basically the quote-unquote vibe, as the kids say, was that they do, mostly student loans, and there was the talk about the student loan forgiveness, and then with the lockdowns, they were like suspending student loans. So this was a company that went from being really hot to really not. And as you see again, was hitting new 52-week lows, and people even down here at $6 were saying, the stock might be done, we might see 4, we might see 3. And basically, what do I always say? I say that in my opinion, this is why fundamentals are key, especially for investing. But when you look at the fundamentals, it's like what was his name? Bill James, right? The guy from Moneyball with baseball. And that's what I mean. Cut right through all the nonsense, looked strictly at the numbers to find out essentially what was good and what was bad. And that's why when we look at a lot of these stocks like SoFi, we can see that, in my opinion, it looks very fundamentally sound and is growing nicely over the years. So what do you want to do? You want to make a watch list of all of these companies that seem to be growing well, have decent numbers. They, have little debt. They have good cash on hand, nice consumer base, keeps growing. You find companies like that, you make a list, you keep an eye on them. Up here at $8, $9, it might be a little overvalued. Soon as it starts dropping into the low 7s, it breaks into the 6s. In my opinion, that's when you begin accumulating shares, building a position, and now boom, you turn around and the stock's up to above $10. So now everyone's flipping out today on SoFi because these are for personal business loans. Just personal loans. And I know that people were kind of keeping the stock down because they felt that it was just all about the student loans. So as you see here in afternoon trading, SoFi announced $2 billion pact for personal loans with funds managed by affiliates of investment manager Fortress Investment Group. Quote, this agreement will expand SoFi's capabilities in its loan platform business, where the company refers pre-qualified borrowers to loan origination partners, as well as originates loans on behalf of third parties. Management was upbeat. Quote, SoFi's loan platform business is an important part of our strategy to serve the financial needs of more members and diversify toward less capital-intensive and more fee-based sources of revenue. Rate the shares market perform with a price target of 7. Yeah, okay. Quote, details in the release were fairly limited, but we view the announcement positively as it potentially demonstrates improving investor demand for SoFi's paper. In addition, ramping SoFi's loan platform business is an efficient way for the bank to generate fee income without consuming capital or adding credit risk. SoFi began as a lender focused on refinancing debt, but now operates through 3 segments: lending, which includes student, personal, and home loans, financial services, and a tech platform. For a long time, lending was SoFi's crown jewel. Of late, though, the company has talked about financial services and tech stepping up a bit more. That played out in the quarter ended June 30th. Adjusted net revenue was driven by 46% combined growth in financial services and tech platform segments, compared with 5% growth in lending. That being said, investors still keen. Okay, beautiful. So obviously, this is phenomenal news, and now we're back up to that 10 level. And you can see that the stock recently, just over the last, I'd say, looks like about the last 2 years, we had a big run up here of, slightly above 11.5, getting up to 1170. We wedge down, we pop up back to about 10 and change, and then we begin to consolidate, wedge down, and now we pop up back to about 10 and change. So in my opinion, I'm looking at this a couple of ways. First of all, in the numbers, I still think the stock should go higher. Second of all, here in the technicals, if we come back to 1170, connecting to the top of that trend line there, you can see now that technically we haven't necessarily, in the longer term, made a higher high yet, right? Because we're up here at 1049, stock right now 1004. So technically, in the longer term, we have 1170, 1049, and now 1004. So technically, we have not made a higher high from the previous breakout above 10, right? But in my opinion now, because this purple line is now viewed as our longer term top line resistance, you can see the stock got right above that trend line. You can see it tested it a few times. And then here on Thursday, it got above it and it closed 863 up here above the trend line. And then what happened on Friday? You had an explosion and the stock jumps up to above 9 and closes at 901. And then today we have the $2 billion news with Fortress, and boom, the stock jumps up to 10. So just in the last couple of days, stock went from 8.5 to above 10. And of course, when we were looking at it, speaking about the long-term wedge for a trade here and the investment longer term overall, this is when I was saying, in my opinion, if I had the capital, I'd be all over it like white on rice. But long story short, because we broke up above this resistance trend line, and now with this news coming out today, chances are volume, in my opinion, will continue to come into the stock over at least the next day or two, and it will at least bring us back up to 1049, if not break above to a higher high from here. And then if we see that, we may potentially retrace back up to 12, in my opinion. And then right here, you can see where we came down before having that big bounce and then selling off. This was back here, looks like August of 2021. You can see that the bottom of this range is about 13.5. So in my opinion, if we continue this trajectory here, the next stop may be a higher high, which would bring us to above 11. And then because we hit a higher high going back to before the wedge started, in my opinion, that will bring us back to above around this level, the initial high, which was 1170, which is why I just tweeted out, again, if you're not following me on X, it's at Stocks by Numbers, because of course the whole name doesn't fit, but I recently tweeted out that in my opinion, I think the next stop is actually going to be 12, and then maybe that 1350 mark. And I know I also saw online a lot of people were waiting for the stock to run back up to this $10 level and close above it, because they were saying that now, not only psychologically, but of course in the technicals as well, they're expecting close to a move to maybe $20 a share. Now, that may be a little extreme, so I do always like to be a little realistic here, and that's why I think, in my opinion, getting this up back up to like $11.5, $12 really shouldn't be an issue, especially off this news. But right now, market cap $10.7 billion. Again, just got the $2 billion little team up deal. And we can see that last year, we consistently see revenue increasing, the net margin percentage consistently getting better. And for 2023, the company brought in almost $3 billion in revenue, currently sitting here with about a $10 billion market cap. But looking here in the immediate short term, again, I do feel we can continue to pump off this news, but if we look at some technicals, we can see the RSI on the daily is approaching 81, technically overbought. But again, this was a specific catalyst that kind of helped catapult the stock up and out of these Bollinger Bands, up and above the RSI benchmark. So we may continue for the next couple of days. And that's why I'm saying we may run up to like 10 and a half, 1070, 11, and then maybe start cooling down, and the traders might jump in and buy some short-term puts. But MACD recently crossed to the upside, and again, we had the climb above the top line resistance trend line, and then we've just been breaking up and out ever since. So congratulations to all of you who jumped in SoFi back in like the sevens and the sixes when everyone was beating it up and it was on sale, and boom, now you're up here climbing. We can also see the 200-day is now established, the 200-day moving average on the weekly, and you can see it's sitting flat right there at 1020, and the stock hit a high at 1007, closed at 1004. So in my opinion, probably easily going to get above that 1020 200-day moving average, which will signal technically more bullish momentum, which in my opinion is why I might be looking for like that 1056, 1070 level, and then maybe we'll pause for a little bit. But MACD steadily climbing here on the weekly longer term time frame, and this is why I'm saying we really beat it up. And then if you look, you can see, yes, it's volatile, but we're kind of slowly stepping, and it looks like we're doing like one of these, right? Which I can appreciate why it's moving that way, but also if we continue moving like this over the next 6, 9, 12 months, then those people may be correct, and we may be looking at a stock sitting here in the high teens, 17, 18, maybe even the psychological $20 level. So that absolutely is possible. Maybe a little bit of an overreaction to the upside, but we know how it works, right? As the stock starts moving, it's not necessarily just the bullish momentum or just the FOMO coming in. It's just kind of that perfect storm to where we're going to pump the stock to new heights and really take it up here in value. And then we're going to potentially, go into another maybe 6-month descending wedge, right? It gets quiet, it gets the spotlight taken off of it. And then when no one's looking, boom, it pops from 13 back up to 19, 20, right? So we may have a volatile swinger on our hands, but it does right now, in my eyes, seem to be a nice long-term grower. Stock on the RSI on the stock on the weekly is up here now at 69. So this is why, again, we can continue higher throughout the week for a little bit and then maybe pause over the next couple of days or rolling into next week. But congratulations to all shareholders. I know that was a big win for SoFi. I wanted to update couple of other stocks here as well. Looking at Honest Company, ticker symbol HNST. This is another company I said, in my opinion, undervalued in the numbers, showing us good growth, right? Probably a good stock to buy. We spoke about it basically right around the time we were looking at SoFi. It was that June, July area. Both companies were in descending wedges for several months, but the numbers look good. And I was saying, in my opinion, this is what they do, right? They quiet it down, they bring it down, they consolidate it. But if you know the numbers are solid and growing, then if we liked it up here at 4, at 3.5, you're going to like it even more down here at 270, 240. And that's why, again, when that happens, you make a watch list, and as the stock sells off, you begin to build a position, accumulate shares, and then boom, you catch the explosion. We had the immediate short-term return coming out of the wedge that we spoke about in the Discord in a video, and I tweeted it out. But you can see the stock went from sub 2.5 back up to above $4 a share. Retested this fib, got back above the moving average, climbed above this top line resistance trend line, running basically all the way to this fib level here of around 470. Consolidated down, and recently had a little pop today, up 4.2%, back up to 372. And you can see that it's sitting right here at that resistance level that we drew out last time, which was one of the levels. Again, I was expecting this. This was one level I said to watch on the way down, and you can see that's basically right where it bounced. And then I said, you can probably see this level here looks like of about 375, and the stock broke up, tried to hold that level again, broke below it, tried to retest it, looks like 2-3 occasions here. So in my opinion right now, even in the technicals, it looks like we're making higher lows and higher highs coming out of this wedge here over the last couple of months. So technically, if everything remains the same and this stock continues, you may see a higher high like that, up to the high 4s, potentially $5 a share. And as you see, that would be right around 52-week highs, if not new 52-week highs. But 370 million up at these levels, EPS growing nicely. They're beating estimates more times than not. Steady, stable growth over the years from 19 to 23, consistently for the most part. Net margin got almost break even. Obviously took a dip, but still steps up. The revenue has been holding around that 90 million mark. We have an earnings beat 1 quarter, 2 quarters ago, 3 quarters ago, 4 quarters ago, and then a EPS miss on the 5th quarter ago. So this is why the company has been pretty consistent for the most part. We can see next earnings due out roughly the first week of November, estimates of about 93 million on the revenue side, a loss of about 2.5 cents on the EPS side. So again, based on the technicals and how it's recently been performing, in my opinion, I think it breaks up and we may see the new highs going into those earnings. And then obviously anything can happen. But overall, again, let's see. I know we have a small loss here for the year, but 344 million in revenue, losing about 40 million. If we subtract that, we're at about 304 million in revenue for last year. Current market cap 372 million. So this is another one that I felt was undervalued in the numbers, and that's why you find the companies that fit that criteria, you develop a watch list, and you wait for the company to pull back to a discounted price or a fair value. It's the Buffett method, ladies and gentlemen. And then you step in and you strike, and that's when you ride the wave, you ride the rebound. And here, if we look at the daily here, this may be a nice little short-term trade in general as well, not necessarily just a long-term investment, because as you see at the bottom of the screen, we recently crossed on the MACD to the upside, and we had nice healthy bounces coming off this 200-day moving average, which again, back here when May started, was off the screen at sub 240, and now it's up here at almost 340. So the 200-day moving average, just over about the last 5 months, is up about, what's that, like 40% or something. And the 50-day as well. Yes, we have our nice little sine wave coming up here, but we are trending upward, as you see. And going back here, what is this, February, you can see the 50-day moving average is about 260, and now you can see it's up to 386, almost $4 a share. So even in the immediate short term, if you are looking for a quick flip and you really like to scalp in and out, based on the MACD, the rising RSI, and of course, just the way the technicals look, in my opinion, nice bounce off the mid-Bollinger Band, this can easily go back to 386 and get above that 50-day moving average. So maybe just over the next couple of days, you can make yourself a couple of percentage points. Again, this is not financial advice. Whatever you do with this information is entirely your own prerogative. RSI on the daily sitting here at 52. Let's go over to the weekly. RSI middle of the road sitting at 53 1/3. Again, you can see the pullback retesting the mid-Bollinger Band, and you can see the tightening where it opens and closes right at that level. But it also looks like we hit a high 372 right now. I know this is the weekly hammer, but you can see technically the weekly candle, excuse me, but you can see technically this right now does kind of look like a bullish hammer. So that's why I think we can continue to go upward. And obviously that may curl the MACD on the weekly time frame and may cause it to cross back bullish. And that's why I think a retest back up here to the high 4s, as I said, potentially 5, could happen here going into earnings. So Honest is another one. This company, what do they do? Food, right? Yeah, non-toxic, natural baby products online, right? Diapers, wipes, and you're noticing that trend, right? Because as we segue now from Honest, we go into Hims and Hers Health, ticker symbol HIMS, listed here on the New York Stock Exchange. Stock ran up and closed today at 20.5, up 1.8 points on the day. 9.7% roughly, up about a dime after hours, or about 0.5% here. And this was another company that I said, in my opinion, looks very good in the numbers. I would be buying them on all dips. I know they pulled back here to like 15 after the news. I know the weight loss drug, it came out up here at 26, and then it slowly started to drop down. You had some articles come out saying that, well, I think they can only sell the drugs that are on like the short list or whatever they call it, right? The FDA, you know, it's like the scarcity list or whatever it is. And if the drug is like scarce, then other outside third parties can start to sell them, right? The generic versions or whatnot. Honestly, again, I'm not an expert in the space, but you guys understand just what I'm saying. We went back in the past and we looked at that article that spoke about it and broke it down in the previous HIMS update, so you guys can go back and check that out. But again, I just wanted to talk about the companies overall, right? So HIMS is another company that, as we see, has been rocking and rolling on the EPS side and on the revenue side as well. We come back here, EPS missed, but revenues beat, and then before that, beat top and bottom line. Revenue recently went from 200 million up to the 300 million mark, as you see. And the company even goes net income positive for the first 2 quarters of 24. And if we look annually, you can see phenomenal growth here just over the last couple of years. Slowly, well, not slowly, but, dramatically chunking up. But looks like we're rapidly approaching that billion plus revenue mark. And you can see, again, revenue 870 million. They lost about 23 million on that number. So as we see from Q1 and Q2 of the company going net income positive, if the revenue continues to climb, it looks like 2024 is going to be potentially not only the billion plus revenue milestone year, but also it may be the year that the company goes net income positive, which again is technically going to add even more momentum into the stock, similar to something we saw with something like a Palantir. So 870 million in revenue. They lost 23. If we subtract that, you're looking at about like 850 million for the year right now, not looking at cash, not looking at debt. And we can see that after today's pump, the market cap right here is at about 4.4 billion. We have a PE of close to 250. And I understand that some of the fundamental metrics could be viewed as overvalued, but overall, looking at the growth and the consistency, this is one that we looked at here initially. I forgot who brought it to us. Shout out to you. You know who you are. But we looked at it here after these earnings came out. Stock was at like 12 or something after hours. And I remember looking at the numbers and I said, no, in my opinion, this is like a $20 stock. And the company immediately just continued to run up here, hitting highs of 17, pulls back to the support trend line, basically where it started when those earnings came out, and then boom, they beat earnings again, and the stock rockets up. They made the announcement about the weight loss drug. Boom, we hit a high 25.74. So my long-term price target from February was hit like 3 months, 4 months later in mid-June. And the company broke above $25 a share. Then the whole time it was dropping down. Again, I know people were saying, oh, well, they said that they're not doing this one weight loss drug anymore, or, they can't do this one because it's off the FDA short list or whatever it is. So everyone started to beat up the stock, and they thought here you had big red candles because people thought that it was seriously going to hinder the company's business and their bottom line, and it was going to devalue the business overall. And you can see the pullback all the way down here to sub 13.5. Now the stock's back up here at 20. So just buying this dip 5 weeks ago, you're up 50% on HIMS. And again, I know I may not have thrown out 50 notifications for you to alert you that this stock is undervalued and it should be bought. But again, this is why I always say I don't like to go off a script. I like to do things my way, and I can appreciate the fact that when these 20, 30-minute long videos are extremely tedious to listen to, I may get monotonous and repetitive sometimes, and it may take a while for you to get that tiny tidbit of information that you've been waiting for, sitting there watching and listening the whole video. So I can appreciate your frustration, but this is why I say, I look at it a certain way, I do it a certain way, and this is why I feel that you should really kind of watch all the videos, because you never know what I'm going to say and when I'm going to say it. But this whole time, I was saying that I liked HIMS. Again, the Discord's free for you guys to come in. I'm using an expired link in the description to keep the bots out. So if you guys want to come into Discord and chat, talk to the other people in there, maybe see what they're looking to trade this week or what they're keeping an eye on, Discord's free to come in, and just let me know in the comments and I'll drop you a nice fresh link so you can connect. But overall, HIMS, in my opinion, I still say $25. And if we come here, 25.74, and if we cut across the absolute tops of the candle, you can see it's like there. right? So that would be, yeah, maybe like 21.40, maybe 21 and a half. So we do have the potential to go a little bit higher. You can see today the stock hit 21.19, but again, if we're going from the absolute top of that candle on July 26, 24, then technically this is our top line resistance. We can go a little bit higher, about a point from these levels up, and then we may again reject and start pulling back, maybe a retest here on the 20-day moving average, or this fib here is 1760. But overall, we really should continue to step upward and onward. And similar to what we saw just now with SoFi, if the stock does continue to climb and, test this level and then close above it, you will probably see that next jump higher, and you may see like 24 and change, potentially retesting new highs of the high 25s and 26s. Because, hey, every other stock is just consistently going up and hitting new highs when, in my opinion, they shouldn't, along with all three major indices. So it really doesn't matter at this point, because everything obviously has to really be on the up and up. That's the gist of what I'm getting from the market. So that's why looking at these smaller up and coming stocks like the SoFis, the Hims and Hers, the Honests, in my opinion, those are buys, especially if you can catch them on dips and sell-offs. But again, work smarter, not harder. Find the companies that look good in the numbers, that you kind of quote unquote know are going to increase in value over time, and then you just keep an eye on them, wait for them to come down to a discounted / fair value price, implement the Buffett method, and then you should be off to the races. Because again, the guy is a self-made billionaire who began investing into stocks and tracking the market since he was like 11 years old, and now he's 90 something. So he has 80 plus years of market experience. So to not incorporate his method, even if it's only 10-20% of your overall portfolio, because I know it's not for everybody, but to not incorporate his sage advice seems very foolish in my opinion. Because again, unless you're Nancy Pelosi with your finger on the pulse behind closed doors on the inside, you're not performing Warren Buffett for the most part. Unless you're only doing massively speculative options trades, right? Then you can turn around and say, well, for the year I made 80%. What did he make? 18%? Yeah, I understand. But we know, again, he's dealing with big size. He's running Berkshire Hathaway, right? He's investing into these companies for the longer term. He's buying shares. So, if we look at how his investments have performed over the years, he definitely knows his stuff. So that's why, again, to not incorporate that method seems very foolish. But yeah, something like Hims looking very good here. Even in the short term, you can see we popped up to the top of the excuse me, to the top of the top Bollinger Band here, 2022. Stock closed at 20 and a half even. So we may have a slight pullback, but we do still have room technically on the RSI. It's sitting here at a touch below 65, so that can keep going up again to that 70 benchmark. The MACD was flat coming into September and then crossed and has been on the up and up basically since the first week, second week, going into the second week of September there. So if any of you jumped in and added to the position, or you saw how much it ran and then you saw a pullback to like 16, so you started buying shares, congratulations. Very happy for you guys, because you definitely made the right call, obviously, as we see. And we also see that the RSI at times was overextended when this news was coming out of the weight loss drugs and they kept beating earnings. So the RSI may not be the best indicator to use here for something like Hims, especially on the longer term time frame. We also have the MACD getting very close, potentially ready to cross to the upside there, signaling more bullish momentum. And that's why, what did I say before? If we get above that top line resistance trend line, again, connecting these tops down, then we could be looking at $24 to $25 a share, and you can retest or maybe make new 52-week highs. As the stock's been climbing up, this nice retest pullback to around the 50-day moving average, bouncing the stock above the mid-Bollinger Band, has the widening here of the B bands. You can see now we're kind of up and starting to tighten and climb with the stock. So that's why right now, in my eyes, it does seem like we're on the up and up here with Hims, and you can see we're technically making higher lows and again potentially higher highs, and it looks like they're all of those companies now that we just looked at all kind of look very similar. And that's why, again, as they're beating it up, Everyone wants to jump down your throat. Oh, see, I knew you didn't know what you were talking about. Or people will say something stupid to me like, oh, this is why you don't listen to people on YouTube. Even though this is someone who just listened to me on YouTube, commented to me on YouTube, and probably follows other people on YouTube to get investments and trading and financial advice, right? But that's why it's just laughable. But again, I just have to remind everyone, first of all, no one is going to be 100% right. So if you're holding me to that standard, guess what? You're going to be disappointed, and I'm not going to be surprised. Because again, what separates me, not to be cocky about it, because I know there's a lot of people out there who know the market, they trade very well, they formulated their own strategies, and they're seeing consistent returns, and they're trying to help people out. And I wish everyone the best of luck, more power to all of them. But again, the one thing that does separate me from a lot of these other, I mean, hobbyists, really, that's what they call them, right? They're self-made hobbyists on YouTube. The one thing that really separates me from the rest of these people is that I was actually a Series 7, Series 63 financial advisor. And that's why when we look at the numbers and we dive into the business itself and we look at stocks like SoFi, like Honest, like Hims and Hers, we look at stocks like Fubo with its growing revenue and tightening losses, potential net income positivity coming. We look at stocks like Arco. We look at the potential long-term growth of stocks like SoundHound when I analyze companies like Rolls-Royce. And believe me, I'm just giving examples here, even though I just gave 8 or 9. You and I both know I could easily give 20 or 30 or 50 because we have been doing very well on this channel over the last couple of years since I started. And that is what separates the men from the boys. You know, you want to call me out on the timing on something like ASTS, I missed the boat, okay, fine, no problem. But pretty much everything else I look at is called for the most part correctly. And, you know, when you're sitting here looking at 10, 12 situations and you're right on 8 of them or 10 of them, and you're batting, 80+% consistently, you have to ignore the noise. That was the original point. This isn't necessarily like, oh, I got salty, so I'm going after other YouTube people. I know it may have come off like that, but the original point was that I know what I know, and in layman's terms, I know my shit. A lot of people who comment or make other videos on YouTube, they think they know their shit. That's the difference. So that's why when I'm watching something like a SoFi and I say, in my opinion, at 690, 650, it's a buy, start buying, it's a buy in my opinion. And then the stock goes a little lower down to 6 and people say, oh, see, you don't know everything. Wow, bad timing. You don't know what you're talking about. Guess what? Now the stock's at 10. Everyone's talking about it. You missed the boat. Right? So I knew it was going to happen. But I can't say that. But I knew it was going to happen. I knew the stock was easily, conservatively going to get back to $9 to $10 because that's where it was. And the numbers have only gotten better. So it has to go at least back to where it was, if not higher. Simple logic and common sense. And this is why, again, I like to always bring up Buffett, because the man was incredibly successful, and this is the way he does it. So, as I said, to not try to implement that strategy, or at least look at it and take the viewpoint from that lens, if you will, whether you agree with it or not. You always have to keep an open mind, and to not look at it through that lens as that viewpoint just seems very, very foolish to me. But again, just wanted to do just a quick update here on those 3 stocks, because as we see, they basically performed almost the same way over the last several months since we last looked at them. And this is why I say, again, I'll say it for the 5th time that I said it in this video, and then I'll let you go, I promise. But I said it once, I'll say it again. This is why, in my opinion, you do your research, you do your due diligence, you look at these stocks, you find out what's growing, how do the numbers look, how's their debt, how's the balance sheet look, what's the book value, are we overextended, how do we look overall as a business. Then when you find the stocks that you like as a business that you feel are going to grow, you formulate a watch list. Then, with your list on the side here, you wait for the stocks to dip down, and then you step in and you buy at a fair or a discounted value. It really is that simple. And there are examples across the board that we can look at. But I just wanted to do a quick update today on SoFi, Honest, and him. So again, any of you who jumped in for a quick trade, any of you who again added to the position or bought at the lows of those three stocks, and now you're up here sitting pretty, you made a great choice. Obviously, you're up huge. Congratulations, more power to you. Brag to us in the comment section below. And also at these current levels now, after these stocks running up, if you still like HIMS, SoFi, or Honest, let us know down in the comment section. And let people know what you think, how long you're planning to hold, and what kind of returns you're expecting to see over the next 6 months, 6 years, whatever your plans are. But that's pretty much it, so I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.